In a world where financial markets shift overnight and fortunes rise or collapse in seconds, one question keeps investors awake long after the city lights fade: should you put your money into gold or real estate? Tonight, we're diving deep into a comparison that has shaped the destinies of millionaires, protected families during economic disasters, and rewritten the rules of modern wealth building in the United States. And trust me, by the end of this story, you'll realize that choosing the right investment at the right moment can be the difference between lifelong security and lifelong regret. But before we begin, I want you to imagine something. Picture yourself 10 years from now, looking back at the choices you made today. The assets you chose. The risks you took. The opportunities you missed. This episode will not only answer the question, gold or real estate, but also take you behind the psychology, the secrets, and the silent wins that the top 1% already know. So sit tight, because what you're about to hear isn't just financial advice. It's a journey into stability, crisis, opportunity, and future-proof wealth. And somewhere between these scenes, you might just find the turning point of your financial destiny. The origin of wealth. Gold has been a symbol of wealth for thousands of years, long before modern currencies, long before banks, long before we understood the true nature of markets. Even today, when tech companies rule the world and digital assets surge, gold remains a silent force that never truly loses value. It sits in vaults, it backs reserves, and in every economic crisis, people run to it like a shelter in a storm. That kind of legacy isn't just power, it's survival. Real estate, on the other hand, built entire civilizations. Every powerful empire rose because of land ownership. Even in America today, the wealthiest families, from the Rockefellers to real estate moguls across New York, built generational power from properties. Land creates control, control creates opportunity, and opportunity creates wealth. Unlike gold, real estate doesn't just sit. It grows. It earns. It pays you while you sleep. This ancient rivalry isn't just about assets, it's about identity. Because choosing gold means choosing security. Choosing real estate means choosing growth. And every investor has to decide what kind of future they are building, a fortress, or an empire. Volatility versus stability. Gold shines the brightest during chaos. When inflation rises, when the dollar weakens, when stocks fall, gold becomes a shield. Investors in the U.S. stock market know one rule: when fear rises, gold rises. That stability can feel like a warm blanket during harsh winters. But stability comes with a hidden price. Gold doesn't create new value. It just preserves old value. Real estate, however, moves differently. Property values can fall, markets can crash, and interest rates can squeeze investors dry. But over time, real estate always bounces back stronger. The growth is slow, sometimes painfully slow, but long-term charts don't lie. Property gains compound like a snowball rolling down a long mountain slope, growing bigger every year. So when we compare them, the truth is simple: gold calms your fears, real estate fuels your future. And in the world of investing, fear and future are two forces constantly fighting inside every human mind. Liquidity or legacy? Gold is quick. You can sell it instantly. No paperwork. No negotiation. No banks involved. In moments of emergency, medical bills, job loss, economic crash, gold becomes cash faster than anything else. That liquidity is priceless. Many American families use gold as their emergency parachute, something that can be opened at any moment to save them from falling. Real estate is slow. It demands patience. You can't sell a house in a day. You can't flip a property in an hour. But while gold saves you in a crisis, real estate saves your entire family for generations. It becomes a legacy. A foundation. A story. Something you pass on, something that grows even when you're gone. So when you choose between gold and real estate, you're also choosing between short-term protection and long-term dynasty building. Both are valuable. But only one outlives you. Cash flow versus silence. Gold sits silently. It doesn't pay you monthly rent. It doesn't create income. It simply waits. That silence can feel peaceful, but it can also feel like wasted potential when you're trying to build wealth aggressively. Real estate speaks. Every single month. It pays you rent. It covers your mortgage. It gives you tax benefits. It opens doors to REITs, Airbnbs, commercial spaces, and passive income. A well-chosen property can turn into a money machine that never stops printing cash. And millionaires know one secret: cash flow is the heartbeat of financial freedom. Gold protects you from losing. Real estate helps you win. And in wealth building, there's a big difference between not losing and winning big. The dark side: risks investors ignore. Gold may be stable, but it's also vulnerable. When markets recover, gold often falls. When people regain confidence, they move their money elsewhere. Those who buy gold at the wrong time often get stuck holding it for years with no growth. It's safety, yes, but safety can sometimes become stagnation. Real estate comes with bigger dangers: bad tenants, repairs, property taxes, market crashes, rising interest rates. A wrong property can bleed your wallet, break your confidence, and turn your dreams into debt. Even in the US, one bad investment can take years to recover from. Both assets have shadows. Both demand understanding. And in these shadows, many investors lose everything, because they thought the safer option was truly safe. Economic storms, the true test. When the 2008 financial crisis shook the US housing market, real estate values dropped violently. Families lost homes. Investors lost millions. But gold? Gold rose. It became the safe zone everyone ran toward. It proved that when the world collapses, gold is the last thing standing. But then something interesting happened. Within years after the crash, real estate bounced back, stronger, higher, more profitable than before. People who bought property during the crisis became millionaires in the recovery. Gold kept people safe, but real estate made people wealthy. This is the reality: gold protects you in a storm, but real estate rewards you when the sun comes out again. Inflation, friend or enemy? Inflation kills cash. It destroys savings. But gold thrives on inflation. When the cost of everything rises, gold rises with it. That's why many American investors use gold as a long-term hedge, a shield against the invisible tax of inflation. Real estate, however, turns inflation into a growth engine. As prices rise, rents rise. Property values rise. Replacement costs rise. Suddenly, inflation becomes your best friend. Your property becomes more expensive to rebuild, which makes it more valuable. While gold protects you from inflation, real estate profits from it. In a country where inflation keeps changing the rules, choosing the right asset can turn your fear into opportunity. The millionaire mindset. Millionaires rarely choose between gold and real estate. They use both, but at the right times, in the right ratios, with the right strategies. They don't fall in love with assets. They fall in love with results. When the market becomes unstable, they shift to gold. When opportunities appear, they shift into real estate. They play the game like chess, not like gambling. The average person, however, chooses based on emotions: fear, greed, pressure, or trends. They buy gold when everyone else is buying. They purchase property without research. And that difference in behavior creates one thing: different outcomes. Millionaires grow richer, while the average investor stays stuck. So if you want to choose wisely, don't ask, which is better? Ask, which is better right now, for my goals? Future trends, what lies ahead? The future of gold remains tied to uncertainty. As global tensions rise, currencies weaken, and digital assets fluctuate, gold will continue to shine as a timeless store of value. It will never go out of style. It will always be trusted. It will always protect. Real estate, however, is evolving into something bigger: smart homes, remote working trends, affordable housing crises, increasing rental demand, and the rise of suburban developments across America. Real estate isn't just an investment anymore, it's becoming a lifestyle industry powered by technology, innovation, and demographic shifts. The future is wide open. But one thing is clear: gold keeps you safe, real estate keeps you ahead. The final verdict. If your goal is protection, preservation, and instant liquidity, gold wins. It's your armor, your backup plan, your emergency shield. It's the investment you make when you want peace of mind more than profit. If your goal is wealth building, passive income, and long-term growth, real estate wins. It's your empire, your income generator, your long-term ticket to financial freedom. It's the investment you make when you want to change your future, not just protect it. But the truth? The smartest investors use both. One protects your present. The other builds your future. And together, they create a balance powerful enough to withstand any crisis. Before you leave, take a moment and think about the life you want 5 years from now. Think about the choices you're making today, the risks you're avoiding, and the opportunities you might be ignoring. Wealth doesn't grow by accident. It grows when you decide to learn, to act, and to move differently than the crowd. If this video opened your eyes, even a little, then imagine what the next videos could do for you. Imagine what your future self would say if you took one simple step today, and subscribe to a channel that brings you the truth behind money, wealth, and financial freedom. So hit the subscribe button, turn on notifications, and join a community built for thinkers, dreamers, and future millionaires. Until next time, stay smart, stay focused, and stay hungry for a better life. See you in the next episode.